Hey guys, welcome to today's podcast episode. And I've got a fantastic guest for you today, a bread and butter guest, Matthew Sercely. And he is a tax advisor, planner. His background is as an attorney for 15 years, but he's an entrepreneur. And I'm really happy to have him on the show, talk about his products, services, and also his ideas around finances, taxes, etc. So, Matthew, welcome.
Glad to be here. Thanks for having me.
Yeah. So, kind of like briefly set the stage, just talk about what you do, how you got here, and we'll dive right into the ideas in the episode.
Yeah, so I've been an attorney for a long time. Most of my career was working like personal injury, people injured in car wrecks. In 2020, that business basically collapsed because no one was driving anymore. And so I was looking for different things to do. I've been a serial entrepreneur. Depending on how you count it, I've had 14 or 15 different business ventures, most of which didn't work out. But in all of that, I spent a lot of time learning about taxes. And I basically said, well, this is valuable. Paying taxes sucks. We all want to pay less in taxes. I wonder if people will pay me for this service. And it just took off. Like it was the easiest business I ever started. I had customers practically immediately. And so since 2020, I have been working with business owners and real estate investors and crypto investors to set up everything in their life, set up everything in their business so that you get to keep as much of your hard-earned money as you possibly can and legally minimize all those taxes you're paying.
Yeah. Yeah, what a fantastic background and setting. And it's interesting that you ask about people investing in crypto or digital assets now. And I'm really curious to pick your brain on that in the later part of the show. But kind of talking about, so one thing is, with your background as an entrepreneur, what are key tax strategies new business owners often overlook?
So the first and most important thing is just getting everything set up in the right structure.
Yeah.
And that's particularly tricky for professionals because a lot of states restrict what you can do, even if it's allowed at the federal level. Like if you're a doctor, you can't have an LLC in California. You have to be a corporation, and that limits your options. But getting everything set up, should you be an LLC? Should you be a corporation? Do you have to be a professional corporation or not? Is the fundamental thing that a lot of people really overlook. And then the other thing that I really help people look at is, what are you currently spending money on that you can make a business expense? Like my favorite question from my clients is not, is this deductible? It's not a bad question, but it's not my favorite. My favorite is, hey, how can I make this deductible? And the answer is sometimes you can't, but every single dollar we can take that you're spending after you pay your taxes and put it in your pocket, if we can put that into the business and deduct it, that's going to save you anywhere from about 22 to potentially like 60 cents in taxes. Some of that's going to be state taxes as well. So it can really add up. Even $1,000 or $2,000 switch from personal to business can result in hundreds of dollars in tax savings.
I really love this idea. And so kind of piggybacking off of tax savings, for a lot of the audience, they're traditionally told, well, I understand small business. I understand business ownership. These are great ways like self-employment. But a lot of the wealthy, they go to real estate. That's kind of been like the kind of what they turn to as real estate. And so, for me, I'm like, yeah, I'm a real estate investor, but I'm like, yeah, but this is a very inefficient way to save on taxes because it's a real pain in the ass to be honest. Like even like if you have a property manager. So what are other ways of saving on taxes besides real estate? You mentioned business ownership, but talk about like other ways like that are more efficient, easier. You have control of the asset. You have ownership of the asset. You have strong. You don't have any counterparty liabilities. Talk about kind of those different strategies.
Yeah. Well, that's kind of a couple questions in one, so I'll try to answer it. One of the tax savings things that can be really efficient, especially if you set up your business right, is setting up some sort of a 401k or an IRA paid for through your business. Many doctors' offices can't do this, but if they can, the solo 401k is amazing because you can
Yeah.
put away over $60,000 a year in tax savings. You can then hire your spouse and they can put away $60,000 a year in tax savings.
Yeah.
And potentially you can even hire your kids and they can put away $60,000 a year in tax savings. And that's just an IRA where, it's just like anything else and you can self-direct it so you can invest in practically anything you want to by setting that up. Now, the solo 401k in particular is not available to everybody. In fact, if you have employees, you normally can't do it, but it's just kind of the best of the bunch. There's lots of other things in there. But when it comes to tax savings, I think a mistake too many people make is they look at what is everybody doing. Well, everybody's putting money on an IRA or an HSA or a 401k. And if you want to get the same results as everybody else, you should do what everyone else is doing. Again, I'm much more of a believer in use your business to structure your life around. So one thing I do, there are several conferences I go to on a regular basis. I have a lot of friends there. It's a fun time. It's basically a vacation for me. But these are business conferences where business topics are discussed. I've been a speaker at 2 of these conferences. I've been a speaker twice at one of these conferences. And so I pay for everything for these conferences out of my business. I pay for the airfare or the gas. I pay for the hotels. I pay for the food. When I don't get a free visit because I'm a speaker, I pay for the actual, registration fee. And, that's $2,000, $3,000, $4,000 per trip for something I'm going to do anyway. But now I'm not paying any tax on that money. And again, that's very easily well over $1,000 in tax savings I'm getting. And I'm not doing anything different. Like I think this is the problem a lot of people have. Like the people who's like, oh, I need to save money on tax. I'm going to go buy a car for my business. That's usually a terrible idea. It's like, great, you save $20,000 in taxes by spending $80,000 on something you didn't need.
Yeah.
I'm much more into look at what you want to spend your money on and find a way to do that in the business. And there's so many things that can be done. Vacations can be structured in such a way to legitimately make them into a business trip. Not all vacations. If you want to do a 4-week trip to Paris, that's going to be hard to justify. But a 4-day trip to Las Vegas is trivial to justify. So that's what I'm really big on. Is I'm big on what are you going to spend your money on anyway? Let's make that tax deductible instead of giving you these pie in the sky examples and telling you to do things you don't want to do. Like why? That's not why you're in business for yourself. You're not in business for yourself to jump through all these hoops. You're in business for yourself to live the life you want to live.
Yeah. And I really love that the solo 401k. That's awesome. And then also business deductions where you're networking, you're out there building your brand, building education, like courses. These things are that are great business expenses. The other question I have is so you mentioned for example crypto and again, this is not financial advice, and there's a lot of but crypto is starting to become a more talked about topic, especially, if those in terms of capital gains and, this idea of putting crypto into IRAs and all that stuff seems really sketchy to me. But, besides paying capital gains on crypto, how can you use these newer assets, newer forms of assets to, save on taxes or a way to, because I know people are moving to Puerto Rico. There's no cap gains tax. A lot of the ultra wealthy, they're there, is set up there, and that way they can trade all they want and have no cap gains. So talk about kind of how you can structure, save taxes through paper investments.
Yeah. So anything regarding crypto is still unclear.
Yeah.
Like it's a lot clearer than it was now than it was, 2 years ago. But there's still a huge amount of gray area in crypto. I invest in Bitcoin. I've invested in other things myself. I don't currently invest in anything but Bitcoin, just so you know my bias.
Yeah.
I do have some Bitcoin held in an IRA. And you can do that yourself with a self-directed IRA where you still have your keys, so you're still in control. There's also companies that do what are called multi-sig wallets, which is what I did because I didn't actually have enough. It didn't make sense for me to do a self-directed IRA at the time. So another company manages it. And if you're going to do any sort of trading, doing that in a retirement account is the only way to do it, because the accounting for crypto trading is a nightmare. I had a friend who was big into crypto trading and had one of these bots doing trading for him, making, 20 cents, 30 cents, 40 cents a trade. And literally his tax return was over an inch thick, because every single transaction had to be reported for the capital gain or capital loss. And his accountant charged him like 10 grand just for the crypto part of it. Now he still made money on it, but it was like, I didn't make as much money as I thought I was going to. But if you do that in an IRA or a 401k, you don't have to worry about any of the capital gain or capital loss. So like, that's not necessarily tax savings. That's just ease of doing taxes. That's the best way to do it. We're not there yet. One of the great ways, probably though, that's going to come out is being able to borrow based on your crypto. And there's already some of this, but I don't trust a lot of the current programs to do it. But borrowing is great because borrowing is not taxable. And this is how the ultra wealthy lives. Like, this is how, I forget his name, the Facebook founder. Zuckerberg, like most of the money he gets that he spends, he borrows against his Facebook stock. Well, that borrowing is not taxable. And since the stock keeps going up in value and appreciates, like, he can just kind of keep borrowing forever. And the benefit of this is when he dies and his heirs inherit that stock, they won't owe any capital gains if they sell it, because their basis will be reset to the value on the day of his death. And this applies to crypto, this applies to real estate, this applies to basically anything that you have a capital gain or capital loss on. So one of the ways it's going to work well is, you don't want to, if you bought Bitcoin at $20,000 and you sell it now at, I think it's about $65,000 today, you're going to have a $45,000 capital gain. That's going to be like $7,000 in taxes you owe. If you die and this doesn't work for your spouse, but if your kids inherit it and they sell it, they owe no tax on it at all. So if you can use that and borrow against it to pay for yourself, and then that your heirs actually sell it to pay off that loan, that works. And again, this is what the ultra wealthy have done with real estate forever. Like, literally since there's been an income tax, basically people have done this. It's more recent with stocks, but it's definitely a popular thing to do. So that's one of the things that, again, it's not there yet, but I'd be shocked if within 5 years we aren't there.
Yeah, because I was thinking about this the other day. Because the one thing is with this tax accounting and reporting, it's great because now there's a lot of new startups that are they're able to access the transactions, and they'll use AI algorithms to compute what your tax burden is. And then the beauty of it is when you're talking about I was thinking about this the other day, because like, it's such a pain to get you have to like go through all these stupid hoops to qualify for a real estate loan. And I'm like, yeah, if you hold this much Bitcoin or Ethereum or Solana or whatever, and you could borrow against that, it's good collateral and there's no counterparty. You own that. That's the asset, and it's like, you don't have to turn in all these stupid forms and all this, BS. That'd be a much more efficient way to unlock all this capital. And then when you were talking about, I had a question about the crypto, is if if it goes on to your heirs, and that's outside of a LLC, outside of a trust, like, for example, if it's just, you just pass it on to your heirs, if they sell it, they don't pay cap gains tax on it. Is that correct?
So their basis gets reset to what it was on the day of your death. So no matter what you bought it for, if you were to die today, it would be worth $65,000-ish, and that would be their basis. Now, if they hold on to it for 5 years and it goes up to $100,000,
I
They
see.
then would owe capital gains, but only from the 65 to the 100, not
Uh,
on whatever you bought it for. So if you're, one of these, I say lucky, but also smart people who bought it like $10, that way they avoid the tax on the gain from 10 to 65.
yeah.
But so yes, if they keep holding it, they eventually may owe taxes on it, but at least they'll avoid all the taxes on the gain up until they inherited it.
Yeah.
Now, this is actually something to watch out for. If you have something that's depreciating, the same thing can happen. So if you bought Bitcoin at $60,000 and then it crashed down to $20,000 and then you died, well, your heirs' new basis is $20,000. So if it goes back up to
Uh-huh.
60,000, now they owe
Yeah.
tax on that.
Yeah.
So usually this is a good thing, but there are times it actually does cost people money in taxes, and it's what you got to be aware of.
Yeah. Yeah. Really interesting. Yeah. And so we talked about LLCs and trust, and then in my mind, these types of new types of assets, especially also a stock portfolio, you can borrow against that. You can sell covered calls, you can sell covered puts. These are all things to increase capital efficiency. So one thing I talk about is one thing that's really interesting in your profile that caught my eye was taxation judo. And what is that, and how can it help businesses save thousands of dollars?
So taxation judo is what I call when you're using the government's own rules against them. And judo is really the perfect description because judo is not about strength. You're never going to be stronger than the government. Judo is about using the other person's own strength, their own body, their own motions against them. And that's what you really want to do if you want the maximum tax savings. So for example, one of the standard rules is if you have an employee and you pay them a wage, that wage is deducted from your income before you pay taxes on it. There's a separate rule that says if your business is set up in the correct way, and if you hire your children and they're under the age of 18, you don't owe any payroll taxes on them either. Now, all this is at the federal level. You still may owe some state taxes. But so if you can hire your 16-year-old in your business, you can pay them $14,000. They owe no income tax. You owe no payroll tax, and they will owe no tax on that if they have no other income, because that's less than the standard deduction. So if you're somebody in the 35% tax bracket, that's a $5,000 tax savings. And there's a couple different things you can do with this. I do this with my own kids. My two eldest kids, they work in my business. And then I pay them, but then I use that money to pay for things they're going to do. So my oldest kid is in Scouts. So then they're going to summer camp in 2 weeks. Well, they're paying for summer camp, not me. My other son loves, my second son loves skating, and he goes and gets skate lessons at the local place every week. It's like $5 a week. Well, he's paying for that, not me. And so again, this is money I would spend anyway, but now I'm paying for it with before tax dollars instead of after tax dollars. The other thing you can do with this is that's earned income. So you can take that money and actually put it into a Roth IRA for your kids. And currently I think it's $6,500 this year is the max. So you could pay them and you could put the first $6,500 into that Roth IRA, which will gain tax-free over their life. And I don't know if when you were in school, they were teaching about interest and compound interest. And it's like, oh, look, if you have $20,000 when you're 20 and it compounds, you'll have way more money than if you put in $100,000 when you're 40. And it's like, well, great. How do I get a $20,000 when I'm 20? Well, this is a way you can give that money to your kids, basically. And again, you'll actually get a tax break for it. And then they'll get to do all those gains. And with Roth, it's tax-free when it comes out. So using, especially kids, but any family members in your business, especially if you got a brother-in-law who you help out, you let him borrow money or something, well, stop letting him borrow money, hire him, pay him, and now you at least get a tax break for what you're giving him instead of it being, again, after tax. That said, hiring spouses almost never works. So hiring kids, great. Hiring other family, potentially good. Hiring spouses almost always just costs you more in taxes. So watch out for that.
Yeah, really interesting. I lost my train of thought because, but it might come back to me. So these, what types of software can you use to really automate everyday expenses that you use that you could recommend to the audience listening, just kind of so they don't have to, spend hours and hours. They can just kind of, it's every transaction's already, they can get over the accountant, all of that.
So the gold standard is something like QuickBooks. QuickBooks is what I use in my business. It is not the easiest software to figure out, but it is basically the best you can get for a small business. Like there's better, if you're doing $10 million a year, do not use QuickBooks. There are better products for you. But if you're doing, anywhere 50 grand to about 500 grand, QuickBooks is the gold standard. Now, QuickBooks integrates with lots of other things. So if you are, as long as you're running everything through your bank account and your credit cards, almost all of those you can just hook into QuickBooks. QuickBooks will automatically import that, but you do have to do the reconciliation. And depending on how many transactions you have, you may need to do that daily, weekly, monthly at the least. One thing, like once you're profitable, you need a bookkeeper. Like not a full-time bookkeeper, but there's like I do a bookkeeping service, but I don't really do it to make money. I do it because my clients need it. I make the money on the advice I give them. But like this is not worth your time as a professional to be going through and doing this sort of paperwork. Again, if you're making $20,000 a year, you can't afford it. If you're making 200 grand a year in profits, you can afford it. And the funny thing is you'll probably make more money because you're spending your time in better ways. You'll probably get better bookkeeping done. And the funny thing is I'm actually not a good bookkeeper. Like that's not my skill set. I'm an attorney, I'm an advisor, I'm an ideas guy, but like I hate the nitty-gritty of bookkeeping. So before I even offered it as a service for my clients, I hired a bookkeeper. And I wish I had done it 2 years earlier, because just not having to waste 3 or 4 hours, in my case, it was only once a month, but still that was time I could have spent either with my family or growing my business. And I literally, within about an hour of work more a month, could make enough to pay for that bookkeeper. So why not trade 1 hour of my time to pay somebody to do it instead of 4 hours to do it myself? Now, you can't just give it all to the bookkeeper and ignore it. That's how embezzlement happens. Like you still got to check things yourself. But so having, again, QuickBooks, but there's Xero, there's NetBooks, there's multiple other things out there. And by the way, Xero, Xero, is probably the easiest one to use. That's the one that I have several clients who use that to do their own bookkeeping. But most of that's going to be automated. And then the hard part is just going in and classifying stuff. And for some businesses, that's very simple. For some businesses, that's incredibly complicated. Like I have several clients who are handymen. And so keeping track of, okay, I went to Home Depot and bought something, but was that supplies or was that tools? Because these things get accounted for differently, and it's important to account for them differently. Like anytime like I see Amazon show up, it's like, okay, I don't know what this is for. Tell me what this is for. And maybe I need to break out into several different categories. But if you're again, like in my business, I don't have supplies. I don't buy much on Amazon. So like my bookkeeping is actually pretty much automated to the point of like my QuickBooks is set up that bill from this thing automatically gets categorized as this thing. And then I don't even have to go in and guess. And then I just need to keep track for the rare times when, okay, I spent money on this thing, but it doesn't fit this category. I need to go manually change that.
Interesting.
And some of this depends on how many transactions you have, right? Every business is different. I work with people who are, very specialized, very high dollar, high end systems, and they maybe have 6 clients paying them 200 grand a year total. Well, you probably have a lot fewer transactions than if you're, say, a dentist who has 100 people coming through your clinic every week, and you've got payroll, and you've got to buy all those toothbrushes you give them, and you got to buy all that dental floss. And I mean, you could legitimately have thousands of transactions in a week in your bookkeeping software, depending on how it's all tracked.
Yeah, which kind of rounding it out, because we talked about a lot of your ideas are libertarian, and I'm actually more libertarian these days, and so kind of round it out. How do your views and your political views, and also how the government is mismanaging money supply, and how that approaches your strategy to clients, and what do you want clients to take away from this, and how can they find and reach you and follow you on all of your social media?
Yeah, so I'm a libertarian as well. I'm not a huge fan of the party necessarily, but I'm all about freedom. That was definitely a part of what led me into this. It's like, okay, it's already a valuable service. It's already something people will pay me for, but I also get to screw with the government at the same time. That's just a bonus, right? The other thing is that, like, again, I don't think taxes are a good thing. I don't think they're a necessary thing necessarily. So I don't mind pushing to the edge to get the maximum tax savings possible. Because again, there is so little black and white in the tax law. For most stuff in the tax law, maybe 15% is this is okay, and 15% is this is not okay. And then you got the 70% in the middle. Like, I never want to be at 69% towards the not allowed area, but I tend to shoot towards maybe 55, 60% towards the not okay area. I like to be aggressive, because my basic theory is, as long as there's a valid argument for it, you may get fined, but you're not going to go to jail. You're not going to go to prison. So the risks aren't that bad. And let's say you're doing something that's not allowed, but let's say you do it for 20 years before they catch you. Well, they can't go back 20 years and collect all of that money you should have owed them. So even if you end up having to pay some penalties for the past like 3 or 4 years, you still came out way ahead. Now, again, if it's something that is like potentially crossing the line and you're going to prison, I don't touch that. I don't work with people who want to do that sort of stuff. That's not good for me. It's not good for them.
Yeah.
But again, it's what one of my friends, a guy named Jack Spirko, says all the time. At some point, a fine is just the price you pay for breaking the rule. And especially when, like, we don't know what the rule is, but like, we have a guess at what the rule is. But again, there's a range of what's allowed. A fine is kind of just a cost of doing business. I never want my clients to pay fines. But again, if you save $20,000 by being aggressive, and then it costs you $5,000 later, you still came out $15,000 ahead. And again, I might feel guilty about that if I thought the money the government was collecting was, going to do good things. But, as far as I can tell, a lot of that money is, being shipped over to, foreign wars, or being, spent on expensive things for politicians. I think you can do more for yourself and your community by having the money in your own pocket than they can do.
Yeah. United States is a fiscally irresponsible country. It's got poor leadership. It's not the country it used to be. But really interesting. Again, none of this is financial advice, but for all the audience and listeners, be sure to check out Matthew's works, and follow, give him a like and follow on socials. And with that, thanks so much for coming onto the podcast.
Yeah, really quickly, I do have a special webpage for your audience, where they can go and download a report with, it's over 60 different possible tax deductions for a business. And there's a few personal ones in there as well. It's really just to get your mind thinking again. Oh, I didn't even think about deducting that. So they can get that off my webpage. It's agoristtaxadvice.com/Lou, LOO. Agorist is a funny word, AGORIST, taxadvice.com/Lou. And that'll put you on my email list. I email once a week. I try to make it very practical tax advice, or occasionally, a new regulation came out you should be aware of. But please contact me there if you want to get in contact with me.
And for all the audience, thanks again for coming onto the podcast.
Again, thank you.